Hello, fellow traders, and welcome to another dose of chart analysis done the Elliott way by yours truly, Richard from Lionheart EWA. Today, we're going to update the wave count on gold according to the recent movements. Before we do that, we'd like to go over the gold price action, actually the all-time price action, 100 years historical data. Just want to basically show you guys here. We have an impulsive bullish move, corrective, bearish, impulsive, bullish again, corrective, bearish, impulsive again. However, this wave, in order for it to be complete, it had to go higher than the previous highest point. So therefore, this bull market is not done yet. But of course, notice the recessions which happened. Also, there is a cycle, of course, every now and then, every 8 to 10 years, a new recession happens. So that's when, you know, gold basically, you see, previously it went, it skyrocketed. But now what we have, if we zoom in a little bit, okay, now what we have here is basically after this bullish cycle, a bearish correction started for that cycle, and we have that bearish correction free, basically 5 on the downside, 1 2 3 4 5, and now of course 3 on the upside is expected. However, 3 on the upside, but let's say as an ABC corrective. So we have A all the way up here, and then B, of course, has basically stopped right here. If we go on the price action, on the actual price action, so we can see, okay, all right. If we go on, I'm gonna go on the daily chart here. We're gonna go over all of this, okay? Because what we're doing today, we're gonna update the wave count. I updated the wave count according to the recent movements. So there's been some changes, and we'll let you in on this. But first, we'll go to the daily chart. Okay, let me zoom out a little bit. Please excuse this mess. As I said, we're gonna go over all of this. Now, there's let's say from that bullish cycle there, what we have is basically on the downside. Okay, so we could count it as 1 2 3 4 5 there. Okay, as an A, and then B, and then C basically on the downside, or we can even count it as A B C, which will be W, and then A B C, which will be X, and then an extended Y wave on the downside right here. Okay, even though on the downside what we have is basically wave 1 formed out of five moves, wave 2, and then the extended wave 3 also formed out of 5 moves there. Notice the Fibonacci extension expansion tool basically. All right, measuring the A and B, or let's say WX, right? Even if we put it like this, still is going to point us out on the end of the third impulsive bearish wave. So therefore, of course, then fourth wave retracement, and then a leading diagonal confirming basically the fifth wave within the C or Y wave. Okay, we're gonna zoom in just for us to analyze this mess that's going on for 1 year now. Okay, all right. So the changes that I made were basically, let's say from the start, from December to 2015. Okay, so we have 1 2 3 4 5, and now, of course, what I changed was basically the 1 2 3. Okay, because um, I changed this obviously because of the rule. This isn't basically the fourth corrective wave, and I'm gonna tell you why. Because this breakout went below the zone that is supposed to. Okay, so it entered wave 1. So therefore, this here is not wave 4. Um, this is basically a corrective B, all right, or 2. We'll see. If this C wave transcended as 1, okay. But I would most likely prefer it to be an A, okay, within this A, B, C. So in other words, we have the A finishing here, bearish divergence signaling the basically the correction, and then after that the corrective started. Okay, so we have basically A here, B, and then C. Notice that the B wave formed a basically this is the irregular corrective structure, and we have a fake breakout right here, creating a new high point, but of course it went all the way down here, completing the retracement, the B wave. Okay, so we have A, B so far, and then C formed out of five moves, impulsive 1, 3, and 5, and then corrective 2 and 4 right here, forming also a contracting triangle. So therefore completing A or 1. I would actually say this is an A. Okay, so zooming in a little bit, now this is when all went crazy. So the changes that I did is basically this W, sorry, was actually here. But what I did, of course, this is an A, and then B, and then of course the C wave. Now the this bullish divergence, of course, you can see it on the price action here as well. With this bullish divergence signal the B wave, and therefore after that the C corrective wave commenced and finalized. Within this C we have WXY. Okay, but the X of course was formed out of complex structure A, B, C, D, E. If you see it there, also the contracting triangle confirming this complex structure. After the wave W was complete, then another cycle A, B, C confirmed wave X, and after that we had the breakout. The breakout for those very significant levels, 130. Okay, 13010, 1300. So after the breakout happened, of course, we didn't have a somewhat, so a longer divergence here just for us to see this move. However, nothing has changed. The direction haven't basically the direction did not change in my analysis. Let's say, for example, if we see the movements there, okay, the direction hasn't changed. Okay, I was actually expecting a move on the upside and a new low point, which actually happened. However, the moves were quite too big, but with this we can actually use them to our advantage. Okay, so what we have basically in front of us is after wave X completed, then basically wave Y um, has broken through the support. Now the way to basically see how much the wave Y can go is of course measuring with the Fibonacci expansion tool the wave W to X. It's as simple as that. So target is 161.8, 150% usually. Okay, so therefore this is basically the price action zone where it's the levels where it stopped, and then wave X commenced. Same thing I did here with the Fibonacci extension tool, from basically measuring Y with X, and this is where it leads. Okay, where we are right now in real time. So basically, uh, I'm gonna give you guys a good level to focus on. Okay, now I want to show you something else. This whole move on the upside, this whole A move, okay? The entire A move is, I use the Fibonacci, normal Fibonacci line, okay? And this is the level for 61.8 right here. That's why I put this as a point of interest, a vibration level. And I'm not saying that this is basically the level where everything will begin in 2017. It will skyrocket and this is the best time to buy gold. No, what I'm saying is that a retracement is expected here. Okay, now the thing is that this cycle hasn't completed yet. Okay, now I'm gonna show you why basically. Okay, so what we have is from the Fibonacci extension tool we measured Y with X. Okay, and wave Z is basically going to end very soon. So at wave Z right here, I'm expecting a bullish divergence. You could say that yes, okay, price action is showing us indeed bears moving the market down, and they're kind of running out of steam there. They're not moving the same amount of volumes like here, and let's say volumes are basically picking up while the trend is going down. This will be a mistake. I'm not gonna fall for it right now. Okay. I'm telling you this from experience. From the size of the volumes right here, I would expect gold to drop even more, especially when the Federal Reserve interest rates hike is basically approaching. We never know what the Feds are gonna are having in mind, but anyway, we'll see. So let's see here what we have. We have wave Y. I did count wave Y. Sorry, wave Z. So we have one here, two here, all the way up here. But we have wave 3, okay, which I marked as extended. 1, 2, 3, 4, 5. Okay, so we can notice that I also use Fibonacci extension tool right here to to measure um, the third wave, and the points of 161.8% is right here where we actually are. Okay, notice that the red Fibonacci's are pointing right here. Okay, so not only the 61.8 from the overall A wave is right here where the B wave should indeed stop and the bullish cycle to continue, but also these lines. Okay, notice that also, let's say if we measure the extended third wave with the fourth wave, however, this fourth wave is not so powerful. I would expect a retracement. I think that the retracement should come somewhere around here at this vibration levels. Okay, so that's why I'm gonna count this as 61.8, because it's too extended. We cannot have two extended waves, third and fifth. So therefore, I would actually say that this is where it should end. Okay. So in other words, what I would actually want to see here before I engage. Notice that I have some. So already I have some trades. So by the way, I have to make some adjustments. Give me 1 second here. Okay. I'm going to put my take profit here at just around this level. Okay, very well. And I'm going to move my stop loss into profit because I'm already inside. I'm already in profit there in the green. So I have a limit order right here on the 1170 levels, which I'm waiting to hit. However, I'm going to pay attention to the signs there, because what I would want to see is basically, okay. What I would want to see is a bullish divergence at this levels. All right. So somewhere around here, okay, this is what I want to see. I want to see a new low point while the volumes will start picking up, because what I believe is that it's still going to continue down based on the bearish sentiment around gold these days and this week, and obviously until the Feds until the Feds will make a decision. So I do believe that this thing will turn right here, and I'm very confident about 2017 being quite bullish for gold. However, we need to take a look at the signs and be prepared. So once this will happen, then of course be sure that you will be prepared with us as well. So yeah, that's basically what I'm looking for. I'm looking for an upcoming bullish divergence right here. Basically, the volumes continuing to pick up while the new low point is going to be created. So my entry for a buy position, the first try will be 1170. However, I have another level at the 150, actually 200% on the overall. Let me zoom out just a little bit. All right, there we go. Okay, from Y to X using the Fibonacci extension tool, then this is basically what I'm looking for. And I'm going to show you something else on daily chart here. Okay, let me just zoom in just a little bit more. Okay, so you guys can see. Okay, this is when the breakout happened. This is when, of course, it consolidated again and again and again. Okay, so this zone right here is quite important. That's why I put my this is a important vibration level. That's why I put my limit orders right here. Okay, all right. Now I do believe that you got the picture here. Okay, we're waiting for a bullish divergence in order for this Z wave to be complete. Then I'm gonna shoot for a buy. And of course, I'm gonna take a look at the structure. If I see some impulsive signs on that bullish move, I'm gonna leave the trade open. However, if it will look like a corrective, then of course I'm gonna sell it somewhere around here, or possibly around here if it goes there. So we're looking at 12,000 units, something like this, 10,000 units on gold to provide us, or let's say at least a correction of 6k units. We'll see. We'll be in touch. Thank you very much. This was Richard, staying in the green and many pips ahead.